What do you make of the overall takeaway here? Margins getting smaller, revenue missing estimates, and concern about increasing headwinds from the competition.
Yeah, I think there's a couple things. First is that 17% growth is not horrible. Let's just put that out there first. Next is that the search ad market is maturing. This is something that Google's been after for 20 plus years now. So this is something that is at a point where there's just lots of advertisers who they're hitting a point of saturation, of diminishing marginal returns. And then I think the other thing that's happening here, as we mentioned, is that Amazon is now a much bigger part of the digital advertising ecosystem. So there's just greater competition than ever before. If you're looking at this as an optimist, you're saying to yourself, hey, Google's doing pretty well now that there's even more competition, the stiffer competition than ever before. If you're a pessimist, you're looking at this as, well, Amazon is dominating product search today. It's the #1 place that consumers go to research anything about retail products that they're purchasing, whether it's on Amazon or off Amazon. And Amazon is capturing a greater share of those search ad dollars from consumer goods or retailers that are selling on any of these marketplaces, whether it's Amazon, whether it's Walmart. So that to me is a little bit of a warning sign. And really, Amazon's just getting going with their ad business. Yeah, they didn't have the greatest quarter for their ad business, growing about 30% year on year when we were kind of used to 90+% year on year growth. But they're really just getting going, where most of the money is just coming from search advertising, and they have a lot of runway to go.
Now, they have been reining in some of their spending. We saw CapEx go down, falling to $4.6 billion from $7.3 billion last year. Also, I have a chart in my Bloomberg here which shows what's happening with margins. You can see margins getting slimmer over the last 3 quarters. Now, I did speak to Alphabet CFO earlier, just before the call got started. Speaking about the revenue miss, she blamed it on FX. She said the numbers reflect FX headwind, in contrast to a tailwind last year. She said the year-over-year growth rate also reflects our strong 2018, so a comparison off a strong base. Now, in response to the Amazon question, is Amazon becoming a bigger and bigger threat because more consumers are starting their searches directly on Amazon? She said, we continue to see people using search robustly across a wide variety of use cases, including shopping. She also talked about how much of ad budgets are still offline and how much of commerce is still offline. Jitendra, what do you think of those arguments?
Well, if you actually look at for this quarter, you mentioned currency, you mentioned comparisons. Basically, they're saying that there were product changes that affected last quarter, and that if tailwind is tapering. I mean, the way, if you look at their revenue growth over the last 3 years, really, you saw that they had changes for the product on mobile search and YouTube, and the growth accelerated. And now we're seeing a deceleration, especially in the paid click growth. Now, has competition really kicked in? We don't think that it has really kicked in yet, but it is a warning sign going forward for this year. But having said that, I think it's more of a function of this tailwind of all the product changes that were done in mobile search and YouTube sort of fading, so the expectations need to reflect that.
So Sundar Pichai, the CEO of Google, speaking on the earnings call right now, talking about YouTube, which is something we haven't discussed yet, talking about how they're focused even more now on quality content, on getting videos off the platform that shouldn't be on the platform. What was interesting in my call with Report is she didn't mention YouTube right off the bat. She talked about cloud. She talked about revenue coming from the Play Store and mobile search. And when I called her on that, she said, no, YouTube is doing great. She talked about direct response advertising, but still they're not breaking out these numbers, and it doesn't seem like there's any plan to break out these numbers. Colin, are you concerned about YouTube? I mean, moderating this content is going to lead to increasing costs.
It is. That definitely is hurting margins, because it's such a manual, laborious process that they have to do in order to maintain good quality content through YouTube. But I'm not really that concerned about YouTube. You look at some of the data that we've published at Forrester, video viewing content is going to increase 8%, the number of hours that people spend weekly between now and 2024 in terms of the number of hours people are going to be viewing video content. YouTube is part of that. So I think think as people view more video content, you're going to have more advertisers that are going to go after those eyeballs, those people that are viewing that content. So I'm not super worried about YouTube in terms of growth trajectory. It's more of the costs that they're going to incur by unless they're able to automate this. Maybe that's something that they're going to take some of that CapEx spending and try to figure out a way of how can we automate the process of getting good quality content on YouTube and the bad stuff off.
We just heard Senator Marsha Blackburn talking about her concerns about big tech privacy in particular, and Google has certainly been in the crossfire of some of these privacy issues and pending potential regulation. I asked Ruth Porat if she's concerned about the backlash against big tech, and what she said to me is, our mantra is we look to build for everyone, and some of the key mantras internally is to respect the user and the opportunity and make sure we're addressing the needs of users in all communities in which we operate, whether that has to do with privacy or content. We should continue upping the bar on ourselves, and that's the way we approach it every day. Jitendra, how much do you think analysts are concerned about coming regulation from Capitol Hill? We've already seen a big crackdown in Europe.
Yeah, and the result of that was shown in earnings for this quarter as well, the fine from the EU antitrust issues. We saw that with Facebook as well. I think the fines is not the bigger concern for the market. The bigger concern for the market, what comes next. At least in the US, we have not seen the impact really kicking into expectations yet, but in Europe, the impact is greater. But having said that, with whatever we are seeing with Alphabet right now, the worry is about slowing growth. And like Colin said, as search matures, they have to really shine some light on cloud, on Waymo, on YouTube, start disclosing these numbers to really show that this company has the next growth leg firing up pretty soon.